Good morning, everybody. It's Ryan, and it is time for our Trading Coaches Playbook today on this Friday as we are approaching Christmas. I love the Christmas season. I hope you guys are doing well today. I hope that you are going to have a wonderful holiday season. If you are traveling, I hope you're safe. Crazy stuff has been happening already. We have a great variety of weather across the country. I have relatives that have been sharing piles of snow with me the last couple of days with some amazing accumulations of where they're at. And I just had to send them a picture of me picking oranges and lemons and roses off of the trees in my daughter's home here in the hills east of Oceanside, California. So I told him, I said, you know what? It's like 40 degrees, 42 degrees in the morning early when we wake up, and it's miserable, to which I got no sympathy whatsoever. But that's okay. That's okay. Well, since I talked to you last, let's see, I think I was in Puerto Rico when I talked to you last. Been to the Bahamas, been to Southern California. That's where we're at right now. We're going to stay here for Christmas and New Year's, and then finally head back home to rainy Washington, which, quite frankly, guys, I have not missed terribly at all. As you know, my wife and I decided to take kind of an extended time of travel. I'm able to do my business from wherever I'm at. So we've almost been 2 months away. And every time I leave Seattle in the wintertime, it gets a little harder to go back. I love Seattle. I do. But waiting for 7 months or 8 months in order to have 3 nice, good months is getting harder. Gotta tell you. So Brenda says, sounds like you're ready to move to a warmer climate. Well, I have some news. Maybe I can even share a picture with you. But last week, Cindy and I bought 5 acres down here near my daughter's 10 acres. It's a stunning piece of property with a view that goes forever. And it's going to be awesome. I'm going to be completely off grid with my solar panels. We're going to put a well in and be completely self-sufficient there. So I'm excited. And let's see, Helen says, that's why I left BC Coast for Penticton. Well, Penticton's a nice place. Been there, done that, except it still has winter. And as we looked around for different places, my wife and I just couldn't bring ourselves to have a guaranteed winter season. From here, from California, we can go to winter, we can go to anywhere. But San Diego, north of San Diego, where we're at in the hills, is considered kind of a little secret. And it's got the best climate, they say, in the world or in the United States. And it's a little pocket of calm in the craziness. In Southern California, I didn't think I'd ever want to live in Southern California. I didn't mind visiting, but being out here, you don't feel like you're in California. You know, not to go political, but it's very conservative out here, which fits my lifestyle. We don't feel the impact of the craziness that Sacramento is famous for. And quite frankly, you know, I don't have kids in school to worry about. I've got grandkids, and they're in incredible charter schools out here. So, we're kind of deciding this might be an okie doke place. So we'll see. Jennifer says, I'm looking at generators and solar. What brand are you using? Well, I don't know what brands you're referring to. I'm not using generators. I've got battery backups. I like having the battery banks. Yeah, I would have a generator just in case. But, there's enough sun down here where we can do everything with the solar. So anyway, let's get started. Love hanging around with you guys. I've been looking forward to this one. This one's going to be just a little bit different. Trip, I like your comment, but let's see, I'm just scanning back over a few things. Yeah, I'm feeling good, guys. You guys know that I lost a lot of weight. I've still got it off. I've settled in at 35 pounds down. My goal was to hit 40 just because the doctor said I could do 40. And I went, wow, that's hard to believe. I actually did it. And then I'm back up about 5 pounds from there, and I'm comfortable, for my 6 foot plus frame to be back in the 185. I'm comfortable. I feel good, feel strong, and I think this is where my body likes to be. So that's my, how did I do it? Well, real briefly, I was put on a diet that sounded so bizarre. I didn't think I could do it, but I have. And okay, essentially it's this. I was diagnosed that I had arterial artery disease, or whatever they call it. The early stages of it. I was told it'll kill me eventually someday, but that there's something I could do about it. Was I at any risk at the time? Nope, but it was there. It was starting. And so did I want to have that problem, which my dad died when he was 71 from heart problems. I don't seem to have those same problems, except I have the seeds for them, slower developing. I said, okay, I can. He said, okay, I'm going to put you on, and I'm on for my health and my arteries and my circulation, I'm on a Chinese herb regimen. 3 times a day, I'm drinking teas that he mixes up every couple of weeks. He changes it up depending on how I'm feeling, what I'm doing. But he said, you can lose 40 pounds in 4 months too. And I went, what? Really? No way. He said, yep. I said, how? And he said, okay, here's what you do. You eat meat. It's a protein diet. Okay. Meat and green vegetables. That's it. Anything that's green. The only exceptions are cauliflower and onions, which is white, and cottage cheese. I hate cottage cheese. I hate onions, but I've enjoyed having some cauliflower. And so on a very regimented schedule, because my wife and I did it together, basically it's any kind of meat. And surprisingly, there's a lot of variety. I thought I'd get bored out of my mind, and I did for a while until I figured out how to use more spices and different recipes, and eggs is fine, but no dairy, no carbs, no nuts. We didn't do any fruit. And I thought it would be horrible, and it turned out it wasn't. And after about the first week, when I started to see the weight drop off, and it's not keto, it's different than keto, I hung in there, and after 2 weeks, I'm going, hey, this is working. And the farther it went, the weight just kept falling off, and I'm going, okay. So I stayed motivated, and now I've added some things back in, and that's why I've moved back up, and I'm settled in about 5 pounds higher than when I stopped dropping. I suppose if I would have kept doing it, he said, you'll just keep losing. So I started adding back in. I eat a little bit of fruit, but I found that I can eat foods that I like that weren't on the diet if I just have a couple of bites, and I can actually do that. I can have a couple of bites, enjoy it. Oh, that's a good flavor. I like that. But I don't have to sit there and get full on it. And I basically, I'm almost not touching bread at all. Bread was something I loved. I can live without it now. So it seems like a big sacrifice until you actually do it, perhaps. And then it's not so bad. So there you go. A little sidebar. You ask. It's healthy. I didn't think that it was. I've done a lot of research, and there's a large body of research that is backing this protein focused diet. And man, I feel good. All the tests are incredible. I feel better than I have in 20 years. There you go. There you go. All right, here we go. Guys, today, well, we have to put this screen up here, and I don't say this lightly. It's just that we do this every time, and common sense should rule the day, but common sense is not so common, as they say. Guys, I'm not going to give you any trading advice. Yes, we're going to be charting today, and yes, it's going to be able to be misinterpreted, I suppose, as you say, well, you showed me a chart, and said, yeah, I did, but I'm not giving you any advice on any particular trades. that, trading has risk. It absolutely has risk. What I'm trying to do is to help you develop some skills in analysis. That's all. And I thought that, this is the basic, and there's nothing wrong with going back and practicing basics. Michael Jordan was famous for being the last person out of the gym, and he would be doing layups. Okay. He'd be shooting free throws, basic stuff, right? But that basic stuff is where the foundation of perfection is developed. So we're going to do some basic stuff today. Don't forget, Rob's content is phenomenal. The amount of effort he puts into keeping good content in front of you guys is remarkable. Take advantage of opportunities that he gives and specials. You're not going to go wrong. You just aren't. All right, here we go. I only have only two slides quick, and then we're diving into this, guys. Listen with your eyes, the art of the chart. You've heard me use that phrase before. Some of you guys have been with me for over a decade. That's what I say. Your chart is going to talk to you, but not talk to your ears. It's going to talk to you through your eyes. Now, guys, charting is finding patterns. And I said in the introduction to this, we are not, or in the information that I sent out, we are not going to focus on patterns, looking for patterns. That's not it. We may touch on it because charting is finding patterns. But there's a basic element of charting that goes beyond, oh, I'm looking for a rectangle. I'm looking for a channel. I'm looking for a wedge, a descending wedge. There's a triple top. We'll be seeing these, but that's not the object of developing charting skills. It's not, can I find this pattern? Can I find that pattern? It's bigger than that, and you'll see. Guys, clarification. Charting is, in fact, smoke coming out of the back of the airplane. It does not predict. It projects, and there's difference. There's a difference between predicting. Predicting is saying, I predict this is going to happen. I don't like that. I don't go along with that. It's easy to lean into feeling like you're calling the shots or that you're reading the tea leaves. Guys, I've told you that your statistics, your odds on every trade is 50-50. And I mean that. I believe that. Your odds are 50-50. I don't care if it's happened, 9 out of the last 10 times. If it has failed ever, then your odds are 50-50. Now, you may have a strong willingness to take a trade based on a repeated behavior that seems to be fairly consistent. But if it's ever failed before, there's no way to guarantee or know that this is not one of those times where this is going to be the fail. This doesn't have to be one of the ones that worked. This could be that fail, and you always have to have that in your context of your risk analysis. You have to, because otherwise you can walk into a punch, and you just don't want to do that. It projects behavior, possibilities. It doesn't direct them. Okay. Another maxim: no pattern, no trade. Guys, if you can't make any sense out of a chart, you better have some darn good reason to trade that chart. Now, I know not everybody here is a technical trader. Some of you still lean towards fundamentals, and I say still, not in a pejorative way. Guys, I've got a trading account that is all based on fundamentals. And guess what? Right now, it sucks. Okay? It sucks in the sense that over the last 18 months, it's down 23%. Okay? Am I proud of that? No, I'm not proud of the results. Am I still trading? Yes, I am. Why? Well, because it's a diversified part of trading. It is based off of fundamentals, and it's sound. Over long term, it is has a very good history and a very good performance. Short term, if you're going to judge it short term, don't even do it. Don't even do it if it's a short term, because when you're doing fundamental trading, that is not short term. Now, when I say a fundamental litmus test, guys, this is a polling question. Now, you're going to feel like it's a trick question, because it is, but please answer it anyway. Don't be afraid. I'm not going to embarrass you. Just answer the way I kind of lead you into this question. Okay? Here's the question. If a chart has great or excuse me, if a stock has great fundamentals, it has just had a good earnings season, it has once again posted profits, its projections are good, and when you look back over the last 10 quarters, every single quarter has projected a strong value. It has had good earnings. It's had good ratios across the board. The last 10 quarters, is that a stock you would be inclined to say, I would like to own that stock? And it's a yes or no. Okay. And there's a little bit of a catch to it, but just answer the obvious. If the last 10 quarters, all the fundamentals on this thing are great, is that something you'd want to own? The answer is yes. I mean, it's a default yes. Now, what if I showed you on the chart, and for the last 10 quarters, the stock had hovered in a $4 trading range. It had not gone higher than $4 up. It has not gone lower than where it's at right now. And it has been steady as a rock. Okay. This is the fundamental litmus test. If all of the fundamentals are great, is that enough to trade the chart? And the answer is no. If in spite of all of the news, the stock does not move well, there's something else going on. You can't trust just the fundamentals. Okay. Now, I'm owning a bunch of stocks that have got tremendous fundamentals, and the projections over the past behavior, the past patterns and the past behavior is that they will trade within the next 2 years within a certain trading range. If they do, I'm going to be fine. This will be a good place to have parked some money. Okay. But looking at it, 25% down right now, well, that's kind of hard. But the market is down 25%. And these are strong companies with good fundamentals that tend to follow the market, which is down 25%. So they're down 25%. Now, can I get upset and lose sleep on it? Yeah, I can, but I don't want to. I don't need to. But when I looked at these stocks, even though they were fundamentally driven, I looked at the chart. The fundamentals were great. Projections are great. Looking at the chart, yeah, they were suffering a little bit, but they were down at levels of, well, it looked like, well, we could have some support here. So yeah, let's go ahead and do that. But then the market continued to crash over the last year, 18 months. Continues to reverse and to fall down. Okay. It is what it is. Now, trading it off the charts, would I have traded it? No, because I would have put conditional trades in. This looks good. We're at a support. If it moves up above this resistance level, it would be a breakout, and that would be a good place to own it. I didn't do that. I based off the fundamentals, and it was at a reasonable support area. I went ahead and took a long-term position. They fell through that support. I didn't jump out because it was a long-term proposition. So was charting used? Yes, but it wasn't the determinant. It was a determinant. Now, fundamentals shouldn't be the determinant if you are trading. If you're investing, yes, but not trading. So when we look at charting, we're looking at it, I'm assuming, as traders, because that tends to be the group that I'm talking to here. Patterns are a reflection of human behavior. Algorithms, I get that brought up all the time. Yeah, but the market's controlled by algorithms now. Yeah, who wrote the algorithms? Come on. The algorithms are still based on human behavior, human fundamental emotions, greed and fear. Okay. And you've heard me say there's no such thing as greed in the market. Greed is fear. Okay. Fear is fear, but so is greed. There's only one real emotion that drives emotional trading, and it's fear. Fear of losing out, which is greed. It's still fear. And fear of getting out too soon. Now, patterns, as wonderful as they are, we look for them, they break down. So you can't lean on them too heavy either, because you can't trust that they're going to continue to be going just because they look so good right now. All right. Last thing, time frame. When we look at the chart, you're going to see us changing time frames. We do it all the time. It's perspective. It's perspective. It's being able to see and move in, move out, put things in context. Charting is a time frame. It has a time frame. Once you're looking at something more than a year or 2 years, you should consider smoothing it out with weekly, and you'll see us doing that. I see me doing that. Even in short-term trading, look back for context. In short term, yeah, I'm doing short-term trading. I don't need to look 2 years back, 5 years back. Yeah, sometimes you really do, and I'll give you an example right off the bat. Okay. Brenda says, what are algorithms? Algorithms are computer programs, okay? They're computer decision-making processes, Brenda, that people design so that decisions are made by a computer, assuming that that computer can process data faster, better, more effectively than human beings, which I think is questionable. I really, really do. There's such a thing as intuition that is very powerful, and that's really hard to program intuition. It's hard to program emotion. But algorithms are the computer-generated trading programs that are based on observing certain criterias and measuring those things, looking for patterns, and then signaling trading. And you can either follow an algorithm or you can set it up and let it run on its own. Does that answer your question, Brenda? Good. All right, so here we go. Let me make sure that I'm where I want to be. Hang on just a second. And we want to go right there. Okay. So we're going to share this screen. Yeah, it should be good. All right. Are you guys looking at a chart now? Yep. Okay. Up in the top left corner, it should say Meta. Okay. All right. Very good. All right. So the first thing we're going to do is we're going to look at this stock and say, all right, let's chart this. This will be a fun one. I can see a number of things here. This is just going back until June. So this is looking back over about 6 months. But looking at this, I can see a lot of fun things to jump in and chart. But the question becomes, what's our time frame? And we're looking at this in just the last 6 months. I see that 2 months ago, we bounced off of $88 here. I can see that we're leveling off right here at about 124. And 124 is significant for several reasons. I want you guys to help out here. What's significant? I put my cursor there. What's significant about where my cursor, where that line is? What do you see? Come on, type. What do you see? Come on, some huge things. Near previous support. Okay, resistance. Why resistance? Kevin, explain. Brenda says support and resistance. Explain. Give me a little more detail. There's more. There's lots of things here I want you guys to be able to spot. Okay, high volume. When? That high volume was 2 months ago. Old resistance might now be, or old support might be new resistance. Okay, I like that, Barry. Double tops, double bottoms. Okay. Kevin says back up to where she gapped down. Yes, that's a good one. Touched resistance 3 times and failed, and there's a gap. Okay, good job, Brenda. So now we're seeing it. So let's take a look at this, guys. Here, we did have a gap. We had a gap back here, October 26th. And we have come back now and filled that gap twice. All right, we bottomed out. The low was 88.09. We started with a surge back up. There's a couple of bullish gaps right there that were unanswered, by the way. So the question becomes, yeah, it's a big obvious gap. Are gaps significant? Well, when we look back over the last 6 months, we see that meta gaps every once in a while, like a lot. When a stock gaps a lot, it becomes less significant. I mean, if somebody cries wolf all the time, you quit listening to them. So these are little gaps. This is different. You got a big gap here. Were these little gaps part of any patterns back here? I don't see any pattern in these little gaps at all. I don't see any recognition. They're just, that's chatter. That's noise. It's nothing. Okay, but this is a big gap. Okay. Brenda says, is the gap fill with the red doji candle, the gap fill? I don't see a red doji candle on the gap fill, unless I'm missing what you're referring to. But guys, you see all the little gaps, they don't count for anything. Big gaps. Now, we see one example here, and it's interesting. You know what? I would like to look back farther, and we will in a second, to see if big gaps are a big deal to Meta. Now, guys, you understand what I just said? Is a big gap a big deal to Meta? Well, maybe. I mean, it looks like it might be. We have one occurrence. Guys, if something happens one time, is it significant? Well, it's significant if it's only happened one time, but does that mean it's going to happen again? No, because it only happened one time. There's no pattern. There's no pattern yet. What if we look back and we found that big gaps with Meta traded into predictable patterns? Now we got something. We got something. So right now we just have a single occurrence. But if you understand gap trading, a big gap, if it's significant, we have come back up, and on this day right here, this big green candle, we filled the gap. The next day we hesitated, we pulled back. We came back up, and here we filled up the gap again, right? No, we're not filling the gap again. It's already filled. But what we did is we came up to the same resistance level and pulled back again. Brenda says at 128.5 is where I consider the gap fill. Hasn't happened yet. Oh, no. There's the gap, Brenda. The gap is 122.2. Everybody get this? Now, this is really important. That is the gap. That is the area that is untraded. On either side of that gap, that is the untraded area, Brenda. That's really important that you understand that. That gap was filled once it crossed back up 122.2. All right? Brenda, this is really important. The gap is not here. It's not 128. It is here, 122.2. Everybody good with that? If you want to argue, go ahead and argue. But I usually don't take on fights that I can't win. Don't mean to be fighting. I'm just saying. Guys, that's the gap. And you see this when you study gaps, you'll see that I'm right on this. All right, so here we go. Gap fill, gap fill. What else can we see here? What else can we see? This is short term. We haven't looked back long term. We're going to do that. But if we were looking for a short term trade next 3 or 4 days, do I care what happened 10 years ago? No. 2 years ago? No. 6 months ago? Not now, because it's not relevant. If I'm making a real short term trade, looking for a 4 to 5 point move, I don't care. Would I look back anyway? Yeah, just as a good measure and out of curiosity to see how the gaps work. But that would be the only reason. What if I'm looking for a longer term trade? Well, then I'm going to be looking farther back for sure. But come on, guys, let's see what else you can come up with. I'll tell you, but I'm just hoping somebody else will teach me more or tell me, show me more what you got. What else is going on here? Okay, we have an ascending pattern, folks. Now, let me do it this way. We've got an ascending pattern. Come on, cursor. Here we go. Now, this isn't a perfect rising wedge. You want to get technical? We could go to this little gap, make this adjustment, and say, oh my, that fits really nice. Yeah, it does. Okay. Short term, a gap can be the start of a trading pattern, which in this case, you could argue that it is. Then we have the fill of the gap right here. Booyah. Okay, so what do we have? We have a rising wedge. We have a wedge pattern. We have 1, 2, 3 rotations. Guys, from a pattern standpoint, how many times do patterns rotate? How many times do patterns tend to replicate? What's the wisdom? What's the thumbnail? 3 to 5 times. Booyah. There you go, 3 to 5 times. What do we have? 1, 2, 3. And we're compressing up against an obvious resistance, but the bottoms keep rising. We have rising bottoms against a flat top. What is that? I call it a headache. Guys, if you're going up trying to break through the ceiling and you hit your head on it once, you hit your head on it twice, you hit your head on the ceiling 3 times trying to break through that sheetrock and it doesn't break, you got a big choice here. Either you're trying to break through the sheetrock and there's a beam on the other side of it, which means you're just going to break your neck if you keep doing it, or you're just that much, one more time you could break through. But you're hurting so bad, you got about 1 time left, and maybe. And you're either going to break through it or you're going to quit and go sit down and take an Excedrin or 4. That's what's happening here. As the bullish efforts to try to go back up through this gap fill and break through to the other side are failing, they're getting less inclined to do it each time, because the energy that it took, look at the surge on this first one. Boom, big surge, pull back, surge up, hit the gap. Oh, ouch, pull back. Okay, we can do this, guys. Here we go. Here we go. There's even a gap. There's a bullish gap. Bam. Oh, ow, that hurt. Ow, gee. Oh, man. So now we're approaching it again. And look at this little doji. Look at this little tiny doji. Oh, I'm not sure. Should we try it again? Man, that last one really hurt. I know, but come on, team, we can do this. Yeah, maybe. I don't know. I'm still dizzy, man. Oh, come on, let's do it. That's what's going on. It's indecisive. They're not sure. If they can be rallied up, they might break through. And then there'll be this, see, I told you, and everybody go, yeah, it doesn't hurt anymore. We're good. Let's go. And everything's great. Or they'll go, screw it, man. I'm done with this. And trade back down to support and maybe say, you know, I didn't want to try this again. I need a bigger break. I'm going on vacation. And boom, we drop through. Now something's going to happen here. Is there a trade today? Oh, maybe if you put on conditions, lots of conditions. If you break above the resistance, which the height right here was 124.3, 124.4. If you break through that, well, then you got some upside. Yay, here we go. But what if we come back down and we take out this last tail? We go down to 114.3. Now we've lost our short-term uptrend. We're broken out of the wedge, and now we have to look for support. Okay. So from a pattern standpoint, we are looking for targets. Okay. Hang on a second, guys. I am being preempted by my boss here. Just a second. She needs her computer. All right, here we go. So what if we break out of the top side of this? Well, then we need a target. And how about this? That would be your upside target. Why? Well, because we have 2 failed rallies at that point. That's a resistance level. And we have nothing in between. Where the gap is filled, Brenda, this doesn't count. Who cares about this now? If you break above these tops, if you take out 125, there's an open door up to about 138. Okay, so you got 13 points, free reign, open territory, open ground. There's no blockers, there's no tacklers. You can run all the way, and you might run into some traffic up there at 139. Okay, what if we break to the downside? Well, you got a couple things going on here. Okay, a couple things going on. Right here, we have a support level. Why? Well, that's the little gap. That's where this little run pattern started. But I don't see that as a strong support. It's not really a strong support. It is the first level, but this is the strong one right down here. Okay, we go all the way down to 87, 88. Why? Because that's where this big gap stabilized and they turned and clawed their way back up. This was traumatic here, guys. Some people were worried that this thing was going to fall through the floor, but others rallied it back up, and the rally won. And so this left a mark. You drive a stake in the ground. This is the place where we turned the battle of the war. We turned the tide. We got the momentum back on our side, and look what we've done. So that held definitely some support. It's emotional. It's historical. So we're in a tight little pattern here. What do we do? Well, if it breaks to the upside, then you got 15 point to the upside. If we break the downside 113, then we've got about 13 points down to the first level, but really we're targeting about 88. Okay, so we have about 25 points to the downside and about 13 points to the upside. So a short-term trading would analyze this and make decisions based on a 15-point upside and a 25-point potential 25. We'll call it, 15 to 25 points on the downside. So upside 15 points, downside 15 to 25. And now you make your trading decisions. And that's as far as we're going to go with this, right? Because we're not doing the trading analysis part of it today. We're just doing, let the charts help us find a trade. And have we got a trade? Yes. Is it a long-term trade? No. How long could this last? By the way, I need some help. I need some help. Give me some answers. Based on what you see, if we were to break out above 125, how long would you project the trade? How long would you allow for the trade? Kevin says this is 6-month chart. Yeah, but Kevin, these are one-day candles. That's all you need to know. All you need to know. If you break above 125, looking back over the last 6 months, how many days on an upside run do you think it would take to bang out 15 points? That's the key, guys, right there. Based on the last 6 months, because we're looking at short-term trading, the most recent is the most relevant. How long do you think it would take to bang out 15 points? Wow, so the answers range from 3 days to 2 months. Guys, here, let me show you, let me teach you something. All right, look at this. Let's go back and count surges that are 15 points. All right, here we go at 157, and we pop up here to, I'm being hidden on here. All right, we pop up to 172. Is that 15 points? Okay, it is. So there's a 15-point run right there. How many days? 1, 2, 3 days. Okay, here's way more than 15 points. Here's 20 plus points. 1, 2, 3, 4, 5 days. Here's a 15-pointer. 1, 2, 3, 4. Here's a 15-pointer. 1, 2, 3. Here's another. That's about 10 points, and it's 3 days, 4 days. Down here, we've got 15 points. 1, 2, 3, 4. And here we had 1, 2. Here we have 1, 2, 3, 4. Here we have 1, 2, 3. All right, now, what's the right answer? If we are going to break above here, what should we budget for? What should we allow for with a little cushion, right? What's the expectation that it might take to do that, to bang out those 15 points? Trip saying the best answer to Ryan's question is 3 to 5. Not always. The chart's making the decision here. Okay. 3 to 4 is what we're seeing. So what would you budget? I would not budget 3 to 4. I would budget 5 to 7. Just because. I mean, 4 is the most. So I'd give it, at least 5, 6 days. I wouldn't take an option that has a 3-day expiration. Okay, that's crazy. Yeah, if it follows the pattern perfectly, it'll work. But, I'm not counting on that. If I give it 5 or 6 days, probably I've got the right combination, right? Does that make sense? What about the downside? Well, the downside would be, which target are you looking for? Are you looking for a break from 114 down to 100, which is 14 points? Very similar to this up here. Well, then we look back and say, okay, on pullbacks, what do we have? 1, 2, 3, 4, 5, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. That's not quite enough, but it's close. But this one took 1, 2, 3, 4, 5, 6. So on the downside for this 14 points, what do we think? Absolutely. Now that's a brilliant observation from Barry. That's absolutely true. Absolutely true. And I need to explain it because Barry, that's not what I was talking about. you make a good point, but it needs some further explanation. So don't let me forget. So what's the target now, guys, on the downside? If the average is 4 to 5, that's not going to be my budget. I'm going to budget in the trade for more than that, maybe 7 or 8 days. Okay, I like what Jennifer says. She said 4 to 5 days, but let's space for 8. I like that. Barry says 5 to 11. I like that too. 8's right in the middle of that. You see how this works, guys? Now, Barry made a great point. He said, look, in short-term options, you have a high theta loss. What's theta? It's time decay. So while you're waiting for those 3 or 4 or 5 days for it to drop or to climb, you're going to be losing a lot in time value. Correct, Barry, I was not talking about taking a trade that only has 4 or 5 days left. I made the absurd comment that if there was only 3 days left, you would likely have it expire. I wasn't talking about time loss. The time would be 100% loss. It'd expire. So what he says is if you have a longer term time frame on it, you will have a shorter or smaller amount of theta or time loss in that 4 or 5 days you're in the trade. You're absolutely right, but that's not the point I was making. Okay. So in this case, Barry, I'm going to give us a check mark. We were both context. Guys, see everybody get that? That's really important that you understand that because Barry is dead on. You would not take a real short time frame trade with short time because your time loss is going to be substantial. You would have a longer time frame on the option, but you would only be expecting to be in it for a short time, i.e. a few days. Does that make sense, everybody? That's crucial that you get that. Because Barry made an excellent point, and if I was, leading you to think that somehow I was saying that you would take a 3-day option or 4-day option, heavens no. Okay, clear as mud. All right, so now, what if, last question, what if you were looking for the 25-point drop? This is the better time frame down here, or the better option, excuse me. This is the better target, the 25 points. In a longer context. So what if it takes 5 or 6 or 7 days and it drops down and it bounces off of 100? It could bounce up a little bit, spend a few days here, and then come back and test it, and it just isn't strong enough and it drops. How long could it take to move that distance there? Well, then you start looking back over time and you say, when you've had bigger drops, how long did it take? This is 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 10. And so your bigger drops, especially if they take multiple, like this one would be a good one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2. Okay, this would be a better replication, a drop, a little bit of a rally, then a drop again. Okay, 22 days, that's a whole month. Jennifer said, give yourself a couple of weeks. I don't think that's enough time, Jennifer. I think you better plan a month on that. That makes sense, everybody? If you were looking at the bigger picture, the 25-pointer, I think you got to have a month on that at least, maybe 2 months. In fact, I would budget 2 months. And if you got it in a month, that would be perfect. All right, everybody good? I don't want to be losing anybody, but I want to start to pick the pace up a little bit because what we're doing here is just good, basic charting. This is how you find trading opportunities. Yeah, we're going to find patterns, but we're not looking specific. This isn't a pattern class. This is a class on finding a trade opportunity. How do you chart to find trade opportunities? Now, I told you that if we had any kind of longer time frame, or if we were in a different scenario where we couldn't see the next support level, which, by the way, if you look down here at 86, 87 on this support level, 88 right here, what if you got down there? You can't trade. You can trade one-sided. You could trade the upside, but you have no frame of reference for trading down because you can't see anything below that 88. You'd have easy upside targets if you were down here at 88. It would be easy to chart the upside for targets, but you can't, the downside, you can't see enough. Okay, so we look here and we say, well, let's change the time frame up and let's look at 1 day, for a year. When we look back over a year and we go, First thing I noticed, there's another big gap. Brenda, has the gap been filled? No. But where would the gap fill? Guys, where do you think the gap would fill? I'm going to show you something. Come on. There we go. There is the gap fill. That's the gap right there. Now, what I would suggest, and I would just make a note, even though it's very, very far in advance, I would make this note. If and when Meta ever makes it back up here to 246, if and when that ever happens, and it'll probably happen, but it may be a long time. If it ever makes it back up here to 140 or 246, will it remember this? Yes. My prediction, absolutely yes. If it makes it back up to 289, will it remember that? Will the traders remember that? Yes, they will. And you'll see pattern trading off of that. I believe that. Okay. Here's something else that I see that's very significant with Meta. And that is, we have more than one example of trading rectangles getting stuck. This stock can get stuck for months at a time. Okay. It did it right in here. It could very well, we could see a pattern develop in just a sideways rectangular trading real tight here for a while. That's a characteristic. You've seen it. Here's another characteristic. Okay. We've got a good support level right here. And let's see, let's draw it this way. We've got a nice support level that runs right through here. And we have a descending pattern. Okay. So we have a little wedge pattern. Well, we've got another wedge right here. That's a descending wedge. That's an ascending wedge. So we see those in the pattern looking back over the last year. But we still have no downside reference of what happens if we get down to 89. We have nothing. So let's go back farther. So we look back and we say, well, let's change the time frame and let's go to, you know what? I think we better go to a weekly. If we're going to look back more than a year, let's look at the last 5 years on a weekly chart. Now here's our 89 down here, and we still don't have a reference point. Wow. We can see that we had an uptrend that ended right here in September, and we've had quite the pullback. In fact, that was September of last year. We've had a pullback here for over a year on Meta, and what a pullback, right? From 400 or 385 up here, all the way down to 88, 385 to 88. That's a pullback, folks. And we've got some support down here around the 140 mark, but we're looking at 88, 89, and there's no reference. So we've got to look back farther. So we change the time frame. We're going to stay here. We're going to go to 10 years on a weekly chart. Finally. So there's our 88, 89 right there. And we look back and there is nothing significant about 88 in the charting history of Meta. Nothing. So the only relevance to 88 would be the fact that it's been there recently. That's where it jumped on the gap. That's where it dug its heels in and rallied back up. Okay, good for them. But if it goes down, past 88, guys, there is nothing significant to catch this. You ready for this? You ready for this? Let's go back 15 years. Where do we catch support? Whoa, 25 bucks. 25 bucks, and that goes back here to 2000. I'm looking at, looks like 13. Yeah, 2012, 2013. So there you've got it protracted for 1 year. It's stabilized effectively right around 25 to or 24 to $27 on a relative basis. There is a frame reference that the traders could say, okay, enough. We've established a baseline where pretty much anybody would believe that this is a no-brainer. This is a safe place to load up on this thing. Okay. And that's how it works. Historically, there is nothing to catch this. You know what? I take it back. Let's do this, because this is so compressed. It's a little hard to see it, but I could take a box right in here. I could do a rectangle right through here, and that lasts for quite a few months. That's 3 or 4, well, that's 4 or 5 months. No, it's more than that. That's almost a year. That's about 8 months of trading within a real tight time frame. And you had a failed rally at the same point, and you have a bounce right in here. So I'm going to zoom in on this, guys, because this is significant. Let me fix this a little bit here. We'll get it straight. All right. So I'm going to call this, there's a failed rally right here. And then you jump up and you bounce. These are 1 week trades. Bounce, bounce, bounce. Okay. This is going for months here, months and months. It starts to rally up and it has an oops again. And that big oops in 1 week, it goes all the way back down. And guess what? As soon as it hits this point that has relevance on a failed high, a bounce, a bounce, a bounce, a bounce, a bounce. It comes back in 1 week, touches it, launches, and away it goes. I would call this a significant potential for now. Let's do it like this. There we go. So that would be an area of some significance on this chart. Okay. Otherwise, we're looking all the way back down to 25 bucks. So a drop through 88, you would have a window of support that could catch it for a while at this, 72 to 85, 15-point trading range here, because that thing had a lot of activity for 15 points during that time frame. A lot of activity. That is a potential support. And then below that, it's 25 bucks. All right. So there you go. That's meta. Now, I said we'd do Stump the Dummy, and I wound up talking on this way too long. I apologize. We have time for introducing one more. Somebody give me another stock up here. I was able to basically show you everything that I wanted to show you on one stock today. I thought it would take more stocks to do it more, but this is doing really good. MU. All right, let's do it. Okay, so with Micron Technology, let's see. Because we're in a sustained downtrend here, I immediately need more time. Okay, so I'm going to keep it daily, and let's just switch to a 2-year on a daily, because we can look at 2 years, but then it gets a little too busy. Then we look at it weekly. All right, we see that it's down at a low point of the last 2 years. It's been a little bit lower, been down to 48. We're sitting down here at 51. We've had a bounce off of 51 a few months ago. Could it bounce off of that? Yeah, maybe. We are putting in a little bit of a support here, but it's not established. That's really not a good, strong support yet. It hasn't been defined as a support yet. This last high was similar to the previous double top here, basically the same height. So we have a failed rally that came up to the last major failed rally. Well, when was the last time we had that? Well, we look back here and we had a triple top. We came back up. We hit that. We tried to break through 1, 2, 3 times, 4 times. Nope, can't do it. So here's a big headache up here. That's a big headache. Trying to break through. After a few times, the head hurts and you go, heck with it, I'm done. And down it goes again. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Same high, higher low, maybe, but we don't know this is a low. It hasn't stopped. It hasn't rallied yet. If this rallies here, then I would start saying, okay, here's what we're looking for. If this rallies, we're trading in this box, and we would be looking for a 65-point target up here for resistance. If it drops, our support level is down at 48. So there's the box that we're in right now. There's not a good trade to the downside here. You'd have to take out the bottom. Every trade you make in here would be an upside move with a target from 50 to 65, about a 15-point trading range. Question becomes, if you got into it, how long would you expect to be into it? Then we go back and we analyze upside runs. How long does it take? They're longer than Meta, I can tell you that. It's going to take you longer to get 15 points than it does in Meta, but you could still calculate a budget on time and then trade your options accordingly. Okay. What if it does go down? We don't have a reference point. So now we got to change our time frame, and we say, look, we're going to go to a weekly chart, and we're going to look back over 5 years. We got to find something that gives us a reference point to what's significant about 48. And we go back and we go, oh, okay, there's lots of history below 48, but it's not at 48. On a weekly chart, the history starts developing potential support levels right here at 42. And then down here, this is sweet. If you want a good support level, if you want a place where you could get a consensus of the traders, here's where you could get a consensus. There's a lot of reasons for this stock to make it down to 32, 30 bucks. 1, 2, 3 major rally points off of that. There were significant rallies. This one, yeah, you got one time, one shot, big deal. This was just an intermediate. This was just a rest break. Surge up here, a rest break came up. There's a big one right there. We gapped and took out this major 1, 2, 3 major failed rallies. We broke through. That's a big deal. Can that be influencing what we're doing right in here? Sure, it could. This could be influencing what we're doing right here. Okay, let's pull this right up in here. Could this be having an influence on what's going on right now? Absolutely. Okay, so you're targeting from where you're at right now, upside target 65-ish. If it gets above 65, 1, and then really free open range all the way up to 98. If we drop through this 48 bucks, the first support level is 42.3, and it's not that great, but you got a great one down here. Guys, this stock, Micron, is talking to you. The traders that trade Micron are leaving breadcrumbs. They're leaving muddy footprints. And if you can kind of get the pattern, you can kind of follow the footprints and see where they like to go. Where do they like to go to rest? Where do they like to go to pick the top, the apples off the top of the tree? You know, where do they like to go on the upside? Where have they found good support levels to take a rest and to get refreshed and come back fighting on the downside? Okay. This is what you're looking for, guys. And yeah, you're going to find patterns, but it's not a pattern search as much as it is you're looking for the behavior that is likely to be repeated. What is influencing this stock? What's an average move? An average, you know, if you have 15-point moves are fairly common, how many days does it take to do 15 points? You need to know that if you're going to trade that stock. Here, you find the surge, you know, the average surge on the upside. How many points? If the average surge is 15 to 20 points and it takes a month to do it, and it does that quite often, well, then your expectation on the next surge is 15 to 20 points in a month. Will it happen? Maybe. If it does, it's following the pattern. If it doesn't, well, you know, it isn't always perfect. Don't kick yourself, or don't, you know, knock over something on the way out of the store because you're mad. But it gives you a projection, not a direction. It doesn't direct the trade. It projects what the behavior of the people who trade this. And if it's algorithms, okay, great. That's the way the algorithms trade it. You're just looking for something that gives you a reason to believe that it might happen again. Okay. All right. Thank you, Trip. He says that we're 2.7 on that, 2.27. All right, guys. Thanks for being here. I hope that you enjoyed it. I had fun. This is kind of my favorite thing to do. It really is. I love to let the charts talk, and because they do. Big resistance up here on top, obviously, but we're a long ways away from that. We're going to have to get through this area, get through the 65-ish area before we'd ever even think about looking up there. But on the downside, guys, once you start rolling down a hill, it's sometimes hard to stop the momentum. It's easier to go down than it up. And if we break through these levels, boom, boom, there's your big one. There's the intermediate. That is very much like Meta. It had an intermediate support, then it had a real nice downside. All right, take care, guys. God bless. Have yourself a wonderful day, and we will see you next time around. Gravity, Trip says. Absolutely. Guys, Merry Christmas. I won't see you guys till after the holidays. Merry Christmas. Happy New Year's. God bless. Bye-bye.